Hey everybody, welcome to another episode of Give Me Five, and today I'm excited to have with us Dave McCoy with Tucker Mortgage, and he's going to share with us the latest and greatest of what's happening in the mortgage industry. So Dave, what's happening? What's going on? What's new?
Well, I want to talk a little bit this morning about FHA loans.
Okay.
The market obviously has changed significantly. It started to shift over the last 6 to 8 months. And over the last 3 years, we've had a considerable amount of conventional loans and cash offers. You get a new listing, it sells immediately, it gets 20 offers on it.
Right.
The first thing they do is take out the FHA loans, government loans, and look at the conventional and cash. Well, we're starting to see a comeback in FHA loans, so I thought it'd be a good time to talk a little bit about what's involved with the FHA loans. So Perfect. FHA, it stands for the Federal Housing Administration under the Department of Housing and Urban Development. Currently in Indiana, in Marion County and our surrounding counties, the new loan limit is up to $472,030.
It's huge.
Big difference in our market. Some other factors that are benefits for FHA, you could be a first-time buyer, but you're not required to be. So if somebody needs to do an FHA again, they can use it multiple times. There's a minimum down payment of 3.5% required. And just recently, FHA announced they're reducing the monthly mortgage insurance by over 30 basis points. So for example, every $100,000 in mortgage that you borrow, that would save you now about $300.
So when does that take effect? Because I know it doesn't take effect for contracts already in place. It's starting from...
It's from loans closing after March 20th.
Okay.
So
Perfect.
For all of our clients right now, we've done a rate extension so we can get them all the lower rate.
Okay, perfect.
That we have in process. So we can do credit scores down as low as 580 on a credit. If someone's below that, we continue to work with their credit and get them above the limits where we can get them approved.
Awesome.
Also on FHA, they don't require a home inspection, but the appraisal is done to meet all the HUD minimum property and safety standards. So it's a little more involved than it would be on a conventional loan, just to make sure that the borrowers are not getting themselves into a money pit that they can't afford to maintain the home.
That's a great point, guys. And keep in mind, that is not a legit home inspection. It's an inspection just for the loan. So for those who are looking to say, well, I'm just going to have the lender's home inspector, appraiser do all the work, I wouldn't rely on them to trying to find the nitty gritty. They're just looking at the stuff that's going to satisfy the loans.
Absolutely. Another benefit, if someone is working to save the 3.5% and they're just not able to get that money together, there are some down payment assistance programs available.
Okay.
So that the borrowers can get the 3.5% down payment assistance, ask the sellers to pay closing costs and prepaids, so they're going to get into the house very inexpensively.
Awesome. All right, guys, so that's the latest and greatest with FHA loans. Keep them in mind because, as David said, they're going to come back. I think with a vengeance. They're becoming very popular right now with the way the market's performing. So as always, if you ever need anything, please give us a holler here at Agent Development. We're an email, phone call, or text away. We look forward to seeing you at the next Give Me Five.